What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Virgin Galactic Holdings with the ticker symbol SPCE. This was a viewer's request, and thank you for your donation. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here we have the daily chart for SPCE, and it's looking kind of bearish. But I'll go over what can possibly happen in the future and maybe some good news. So you can see that, good news based on the technicals. So we have this resistance at the 550 level. It could be a little bit lower, maybe right around here at this, right here fits better because that's where prices came up to in this month and immediately got rejected strongly. So there's some resistance there. But we do have support at this all-time lows. So I'll go and mark that right now. So basically price, why did we start going lower and lower? Is because if you go in the past, there is this downtrend. So prices are making lower lows, lower highs in this downtrend. And this channel will represent that price action. So we have this swings right here. I'm going to connect the swings. You can see this was the high, a lower high, and then we finally broke the channel. So we're breaking the channel, which shows signs of weakness in the downtrend. So there's a good chance it's coming to an end fairly shortly. Much more likely than any other time in the past where we're probably going to see a bottom. But it's not going to reverse right away. So since this price action was inside the channel at this $3.20 level, the market is going to come back to retest it in the form of two legs. So in the first leg, it already did that. But since the market moves in twos, it could make another large leg down. So that's why we saw that move up, but prices immediately got rejected and failed and got shot down, back down to the lows because the market moves in twos. So we had one attempt down. It's in the formation of the second attempt, and the second attempt is targeting the 166 level. So that's basically half the market cap right now if we reach it, which is possible because SPCE is not making any money, earning any money. So we could see lower prices, but that would probably be the bottom. I don't see any lower prices. I mean, we could go lower, but technically this could be the bottom. We'll have to wait and see, and we might not even reach it right now. If this $3.30 level holds, then maybe we just bounced up from here. The market is going to try one more time to reach the measurable target, and if it fails, meaning we start seeing aggressive buying back above like the previous high, then we could probably retest the 5 level and possibly even higher. So right now, the reason we're going lower is because we had this prevailing downtrend. After the break, we expect two pushes lower. So we got one big push. Prices are starting the second big push. So it stopped at the 349 today because there's prior support right over here. But they're going to be trying to reach the 170 level, 160 level. And there's a good chance they will because, I mean, this is a very strong downtrend. And, prices have been going down for quite a long time. So there's a lot of momentum for the bears to reach this target. So I'm looking for lower price targets, but it's not guaranteed because this 330 level could hold. But there's a good chance it is more likely it probably won't hold because of this bearish momentum. But we'll see. But as right now, that's all I have on the daily chart. The reason we're going lower is because of the downtrend. Downtrend is almost over after this second push is over, or the bears failure to reach that measurable target because this 330 level could hold. We'll have to wait and see. But as right now, that's all I see on the daily chart. So let's take a look at the weekly chart to wrap it all up. Here's the weekly chart. And first thing that stands out is that obviously there was a big bubble, and the bubble popped and prices went lower and lower. Price is currently below the IPO price and even below the 2019 lows. So very bearish chart. And you can see this EMA, you can just throw a 21 bar exponential moving average on your chart, and that will tell you if we're in a bull or bear market. Very simple to do, anybody can do that. So once you pull up your chart, if most bars are above the EMA and it's bouncing off of it, we're in a bull market. Like over here from about March 2020 to about February of 2021, that was a bull market. If price is mostly below it and getting rejected, then that's a bear market, just like from July of 2021 up until now. Price is not getting above this EMA. It does, but it's short-lived and immediately finds resistance. So that's a bear market. So in a bear market, we're making lower lows, lower highs. Every rally is going to be, just a temporary high for price to go lower and lower. So since prices came back down to this prior low at the 330s, we could find support here. But what the bears really want to do is reach that target, which is targeting the 170, 160 level. 1.65, 1.72. Right around here is the potential target for this downtrend. So let's go over some good news. Like I mentioned before, the good news is that we're probably at near a bottom than any other time on the chart. And the reason for that is because the downtrend looks to be slowing down. You can see how the angle of the EMA was pretty sharp before, from about August of 2021 to about March of 2022. It was kind of sharp. Then the price angle got shallower, and now it's kind of getting more and more shallower. So it's kind of rounding out. It's kind of finding its floor or fair value, you could say. So the good news is that, you know, as long as this company doesn't go bankrupt, you know, the probability is high that it will probably eventually go back up to its all-time highs. I mean, because the company is going to continue to grow, right? It wants to grow, it wants to continue on profit. So as long as it doesn't go bankrupt, eventually, you know, there's a good chance it will continue to grow and, you know, get more profit and whatnot, and the price will relate to that increase. But as right now, you know, the price is dropping lower and lower. Technicals say it's still kind of weak. You clearly see that price is getting rejected from the EMA. And it's targeting the 160, 170 level because that's the measure move target. So this is one leg down, and this is the second leg down. And also, you can see that prices did get above the EMA. So that was the first time in this entire bear market back here this year. So, you know, the entire bear market, this was the first time it got above the EMA. So that's, again, it's showing signs of strength for the bulls at these lower price levels. But again, it's still going lower, and if we don't find any support here, I'll be looking out for that 170 level, and there's a good chance we'll probably even reach it. So until we do something like this, you know, we see a huge push up and we're starting to make higher highs, higher lows, this is a confirmed uptrend, then I wouldn't be looking for a bottom. Until we do this, then no bottom, because we can still go lower and lower. So that's what I want to see, but that could take months to play out. But because right now, you know, price is still looking weak, we're probably going to go lower and lower. So that's all I have for SPCE on the daily and weekly charts. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.